All right, let's talk about MNE Engineering. They just posted a quarter that made everyone sit up and take notice. So today, we're going to deconstruct the story behind these blockbuster numbers and figure out exactly what's driving their incredible performance. Let's dive in.
So this is the number that started it all. A massive 69% year-over-year revenue growth for the first quarter. I mean, a number like that, it doesn't just happen. You've got to ask, how on earth did they pull this off?
And look, this isn't just about selling more stuff. The growth is firing on all cylinders. You can see right here, it's not just the revenue that's jumping. Their profitability, the EBITDA margins, and the actual profit after tax, they're all taking a huge leap. This tells you there's some real fundamental strength here, not just a one-time sales bump.
So to really get to the bottom of this, we're going to walk through 4 key things. We'll look at their 2 main growth engines, unpack their pretty incredible U.S. export advantage, see how they're expanding to keep up, and finally, check out what they're promising for 2026.
Okay, first up, let's look at the core of the business. M&B's growth is really powered by 2 different divisions, and you know what? Both of them are absolutely crushing it right now.
So on one side, you've got Phoenix, their pre-engineered buildings unit. That grew by a staggering 87%. And on the other side is Proflex, their roofing division, which posted a really healthy 34% growth. But here's the thing. While both are doing great, it's that wild acceleration in the Phoenix division that's really supercharging the whole company. And a huge piece of that story is happening overseas.
Which brings us to the real secret sauce in this story. This is where M&M has figured out a high-margin play that is completely changing the game for their bottom line. And this is the million-dollar question, isn't it? I mean, you hear 50% tariff and you immediately think, well, game over. You'd assume that would make them completely uncompetitive. But somehow for M&B Engineering, that's just not what's happening. So how are they making this work?
Well, the first thing you have to understand is that this isn't some penalty aimed specifically at India. It's what's called a sectoral tariff. It applies to steel products from every single country that exports to the U.S. That means M&B is on a totally level playing field with competitors from Mexico, Canada, or anywhere else.
So here's the winning formula broken down. 1. Their base price is way lower than what local U.S. guys can offer. 2. They're not just selling steel, they're selling a complete solution. Engineering, detailing, the whole package. And 3, and this is the kicker, the U.S. customer pays the tariff. And even after they do, the final price is still a better deal. It's how they've turned a huge obstacle into a real advantage.
And this right here, this is the payoff. Just look at that difference. In India, they make a solid 10 to 12% margin, but in the US, a massive 25 to 27%. This incredibly profitable export business is the secret weapon that's pulling the entire company's average margins way up.
And hey, don't just take my word for it. Management said it themselves, right on their earnings call. Their export margin is, and I quote, at least 1.5 to 2x what they get back home in India. That one fact right there explains so much of the incredible profit growth we saw at the beginning.
So when you've got a strategy that's working this well, what's the next logical move? Well, you build more capacity to do more of it. Let's see how they're gearing up for the future.
And they are not messing around. They are pumping serious money into meeting this demand. They've got a big expansion coming online early next fiscal year, and then they're doing it all over again a year after that. This is a huge signal that they believe this export boom is here to stay.
And it's not all just about exports. Their domestic roofing business, Proflex, is also expanding. They're adding more mobile units to go after huge projects right here in India, especially with the railways and in warehousing. They are absolutely fueling both engines of growth.
Okay, so this brings us to the final piece of the puzzle. We've seen how they did it. Now let's look at what the company is expecting for the rest of this year and beyond.
Management has put some really confident targets out there for this year. They're aiming for over 25% revenue growth, and they expect their margins to keep getting better. And the engine for all that? They plan to more than triple their U.S. export business. It's a seriously ambitious plan.
And if you look even further out, their long-term strategy is becoming crystal clear. Starting in fiscal 27, they want exports to be at least 20% of their total revenue, year in and year out. That shows a permanent shift in their business model toward these higher-margin international sales. So we end on this big question. M&B Engineering has put together a brilliant strategy, basically turning the complexities of global trade into a massive competitive advantage. The challenge now, of course, is whether they can keep that momentum going in a world that's always changing. For now, though, it's just a fascinating story of smart strategy and incredible execution.